Good afternoon and welcome to your weekly FX options report. Today is Wednesday, January 6, 2010. As we kick off the new year, the broader market rallied and for the past two sessions has been trying to find its footing. Now, investors are awaiting Friday's U.S. employment report, which will be coming out, which does include both the non-farm payrolls figure as well as the unemployment rate. And ahead of that report, on Wednesday, the ADP reported that private sector firms in the U.S. cut 84,000 jobs in the month of December. And despite the losses, this is the fewest number of job cuts that were seen since March of 2008. And the ADP downwardly revised November's figures to minus 145,000 from the initially reported minus 169K. And at the same time, the ISM's non-manufacturing survey came in above 50 at 50.1 for the month of December from the 48.7 reading in November. And the FOMC minutes will also be coming out later in today's session. And overseas, the Eurozone Services PMI came in at 53.6. Now, shifting our focus on over to the spot FX market, the dollar does continue to trade flat against the euro, and the Japanese yen is weaker across the board. Now, in Japan, Prime Minister Hatoyama accepted the finance minister's resignation and appointed the deputy premier, who is Naoto Kan, and there have been some fundamental effects due to Kan's appointment, as he does favor a soft Japanese yen. Meanwhile, over in the UK, the BOE's two-day meeting has begun, and they will be announcing their interest rate decision on Thursday. Now, one way to trade your views on U.S. dollar strength or weakness is to take a look at ISE's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. And now let's take a closer look at the individual FX option pairs, starting out with the AUX. Now that is the US dollar against the Australian dollar. Now, in the short term, the bias does remain bullish and the pair is shaping a rounding bottom, which does call for a bounce. The preference of trading central analysts for the AUX is long positions above the pivot of 106.30 with targets standing at 118.15 and 122.50 in extension. And now let's take a look at the BPX, which is the US dollar against the British pound. A continuation of the rebound is expected for this pair. It has also rebounded on its support and is breaking above its resistance. The RSI is also well directed right now, and the preference of trading central analysts is long positions above 60, with targets standing at 63.50 and 65.50 in extension. And now let's move on to the CDD, which is the US dollar against the Canadian dollar. For that pair, caution is advised. Intraday technical indicators are mixed, and the preference of trading central analysts for the CDD is long positions above the pivot of 102.50, with targets standing at 108 and 111.25 in extension. And now let's take a quick look at the EUI, which is the US dollar against the euro. Now for that pair, the upside does prevail and the RSI is well directed. The pair has broken above its bearish channel upper boundary and is currently challenging its resistance. The preference of trading central analysts for the EUI is long positions above the pivot of 67.80, with targets standing at 70.50 and 72 in extension. And now very quickly moving on to the SFC, which is the US dollar against the Swiss franc. The bullish bias does remain above the 102 level. The pair is also pulling back on its new support ahead of a rebound. Now the preference of trading central analysts is long positions above 102, which is the pivot, with targets currently standing at 106 and 108 in extension. And last but not least, let's take a quick look at the YUK, which is the US dollar against the Japanese yen. Now for that pair, the upside does prevail. It has broken above its medium-term bearish channel upper boundary and does remain well directed. Now the preference of trading central analysts for the YUK pair is long positions above 88, which is the pivot, with targets standing at 93.50 and 96 in extension. And now let's move on to your weekly trend opinion segment. Now last week the US dollar did face weakness against the majors, but we do have to keep in mind that it was a holiday shortened week and volumes were light. Now in terms of portfolio performance for Trading Central's ISE/FX options performance, it does stand at 1,300.81% since its inception in August of 2007. And for the entire year of 2008, their portfolio does stand at 669.81%. And now in our next segment, we do have a couple trade alerts for you in terms of FX options. And now let's start out by looking at those pairs. Now this week, Trading Central has taken advantage of US dollar losses to enter into new long positions. So they will be considering calls on the SFC, which is the US dollar against the Swiss franc. Now, the pair has pulled back on its new support ahead of a rebound. And also, they do recommend the PZO because the pair has struck against its resistance and should reach its next support. And last but not least, in terms of trade alerts, they will be recommending puts on the EUU, which is the euro-dollar pair. Now, the euro-dollar pair, or the EUU, is expected to strike against its new resistance, which is its former channel upper boundary. And looking ahead to next week, the bearish US dollar trend is expected to remain intact. Now, as a result, Trading Central will be looking at the CDD, the YUK, as well as the VPX. Now, they are going to be looking at the CDD because it has struck against its declining trend line and is currently challenging its strong support level. And they will be watching the YUK because it is pulling back on its new support before an expected up move. And last but not least, for the BPX, they will be watching that pair because it is rebounding on its intermediary support as it heads towards its next resistance. And that does wrap it up for a weekly FX options report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a great day.